Hey everyone, and welcome to another deep dive. We're going to be talking about something that I know is on a lot of your minds these days, the economy. And especially how all these headlines we keep hearing, strong job market, but then also inflation might be coming back, how that affects you, especially as you think about retirement.
Yeah, it's definitely a time of, well, a lot of people are saying it's a time of uncertainty. We're seeing some trends that, well, they're kind of reminding some folks of what we saw, back in the 60s and 70s.
Exactly. Like when you look at this last jobs report, 254,000 new jobs in September, unemployment down to 4.1%. I mean, these are good numbers,
Like,
right?
on the face of it, absolutely. More people working is usually a good thing. But it's like, remember what happened? Well, some people call it the Great Inflation back then.
You mean because if the economy gets too hot, then prices go crazy?
Yeah. It's a bit more complex than that, but yeah, that's part of it. Demand starts outpacing what we can actually, produce or supply. And that puts upward pressure on prices.
So are you saying we're headed for, like, a repeat of the 1970s? Stagflation all over again?
I wouldn't say that just yet. There are some parallels, sure, but it's a different world now. I mean, one good sign is that, at least for now, inflation actually seems to be cooling down, even with all these new jobs.
Okay, so that cooling down part is doing a lot of work in that sentence. What's the Fed doing about all this? They're the ones supposed to keep things from getting out of hand, right?
Well, they just cut interest rates again by 0.5%. So that tells you they're more worried about keeping the economy growing than they are about inflation, at least right now.
And what does that mean for, say, someone who's already retired or getting close to it? I mean, doesn't that affect their savings and all?
Oh, absolutely. And that's what we really need to dig into, because even what seems like small changes in inflation, over time, that can have a big impact on your buying power.
Right, it's like that drip, drip, drip that you don't always notice until...
Until it's a flood.
Exactly. So let's dive into that. So how do we even measure this inflation drip, as you called it? What are we looking at to know if it's getting worse?
Well, the Fed, they've got their eye on a bunch of things, but one of the big ones is this thing called the PCE.
The PCE.
Yeah, it stands for Personal Consumption Expenditures Price Index, but everybody just says PCE. It's basically, it tracks how much the prices of all the stuff people buy, everyday things, how much those prices are going up.
Okay, and what's the PCE telling us right now?
So as of August, it was up 2.2% over the past year, which actually that's down a little bit from July. So that's, probably why the Fed felt okay with cutting rates.
So good news, right? Inflation's easing up.
Well, I'd say it's too early to celebrate. There are still some things out there that could make inflation spike again.
Like what? Give us an example.
Well, remember all that talk about supply chains a while back, like how everything was backlogged and getting more expensive because of it?
Yeah, felt like that went on forever.
Right. And it's mostly gotten better, but it's still kind of fragile. Like if we had some big disruption, could be anything, another pandemic, who knows, but something that really messes with how things get made and shipped, that could easily send prices up again.
And then we'd be right back where we started. And speaking of things that could mess with prices, what about all this unrest in the Middle East? I mean, oil prices have already jumped up, and I know a lot of our listeners, they remember the 70s when gas lines were around the block.
Yeah, nobody wants to go back to that. But it's a good reminder that what happens over there, it affects us here, too. And it's not just the obvious stuff like gas prices. Oil is like the ingredient in so many things. So if the price of oil goes up, well, the price of a lot of other stuff follows.
Makes sense. And we were this close to another supply chain mess here at home, too.
Yeah.
Right? With that dock worker strike that almost happened.
Oh, yeah, that International Longshoremen's Association, if they'd gone on strike, I mean, can you imagine? Everything we buy pretty much comes through those ports. That would have been a nightmare. Prices would have gone through the roof.
So it's like we've got all these plates spinning in the air, right? The job market, inflation, what the Fed's doing, what's going on globally. And for folks who are retired or getting there, it's got to feel like, how am I supposed to plan for all this? It really does. So where do we even start? What can people actually do about all this, especially if they're retired or close to it?
Well, the first thing is don't panic. Seriously, it's easy to get overwhelmed, but, people have been dealing with economic ups and downs forever, right?
It's not a first rodeo for a lot of our listeners.
Exactly. So step one is just take a deep breath, look at your situation, and figure out, okay, what's my plan?
And part of that plan has got to be, how do I protect myself from this inflation thing, right?
Yeah, because even if it's not super high right now, even a little bit over time, that eats away at your savings. Like, think about it this way. If prices go up 3% a year, which doesn't sound like much, but in 10 years, you need like almost a third more money just to buy the same stuff.
Ouch. Yeah, that adds up fast. So what can people do? Just like hold on to their cash and hope for the best?
Definitely not. That's actually the worst thing you can do with inflation. You got to make your money work harder.
Okay, how do we do that?
So a couple things. One, make sure your retirement savings aren't all in one place. You want a good mix of investments, stocks, bonds, maybe some real estate. Because if one thing's not doing so hot, hopefully something else is picking up the slack.
Diversification, right? Don't put all your eggs in one basket.
Exactly. And then there are also these things called TPS, Treasury Inflation Protected Securities.
TPS. Okay, never heard of them.
They're actually pretty cool. Basically, it's like a bond, but the amount you get paid, it adjusts with inflation. So even if prices go up, your investment keeps pace.
So it's like inflation-proofing your money, sort of.
Pretty much, yeah. It's not perfect, but it can be a really good option for part of your portfolio, especially if you're retired and living on a fixed income.
That's really interesting. And I got to say, I'm glad we're having this conversation because I bet this is stuff a lot of folks haven't even thought about.
That's the thing, right? Knowledge is power. The more you know about this stuff, the better decisions you can make. And like we said, don't panic, but definitely be proactive.
Absolutely. Talk to a financial advisor, do your research, figure out what makes sense for you.
Exactly. And remember, you've got this. You've been through economic ups and downs before, and you came out okay. This is just part of the journey.
I like that. Well said. A huge thank you to our expert for walking us through all of this. And everyone listening, thanks for joining us for another deep dive. Remember, the more you know, the better prepared you are to make those smart choices for your future. Until next time, stay informed and take care.